Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, November the 16th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses as we do not know what the market's going to do. Our hypotheses are our trade plans. Then we wait for the market to open up, show us who's in control, and then execute the plan that best suits the market, not try to make the market fit our plan. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to and then live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are a retail trader operating within self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So take a look at yesterday. Yesterday, I didn't do a pre-market because of the fact that I burnt my foot, and so we missed it. But the market opened auction just in range. We had that big sell-off, and then, of course, the trade of the day right here, which was the FUBAR Mr. Sneaky Tech Gap. Got the whole range on that one trade had you held the whole time. Came back up inside of the prior day range, came back down and basically fought the low of the prior range, and then basically fell back out, but buyers stepped in, and we closed just inside of range at 25.65. Buy the dip buyers are still here. Taking a look at the overnight session, see that overnight session moved down to that 62, which was our value area low of the RTH session. The buyer stepped in and rotated us up through the range high from yesterday and came up into the 75, and basically we're going sideways back at that 73. If you remember that 73, let me just draw it in here. I took it off because it wasn't as important, but I'm going to put it back in here. So when we gapped up here from the trip through value, it was that 73 area where we accepted value higher. Remember that the microcomposite VPOC, this VPOC right here, before the last 2 days was all the way down here at the 49, and then we spent 1 day in balance. The 4-day microcomposite was at 77. The longer time frame microcomposite VPOC moved up to agree with it. Now, typically, and this is what we were looking for yesterday, was continuation in yesterday's Globex with this shift of value higher. Instead, we had this weird move that just didn't make any logical sense. But they brought it down again, and the buyers just stepped right in and just rotated back up, and then made the continuation in the Globex back towards this value right now. So I mean, in the longer time frame of things, all value is coming together in around the 77. So if we can get back above the 77, we should get a move back out of this value and go and make that unequal all-time high in the Globex tested at the 94.50. We don't really need this smaller microcomposite now. Everything's lining up, so we can take that off, clean up our charts just a bit. This should probably come over 1 day. And again, 73 is going to be important to us because it's the prior microcomposite VPOC. It is also the value area low from the last 5 days. Or the 4 days of balance here. I don't have this in here because this is a breakout day out of value, and nothing's really going to change. Even if I I will bring it into the longer time frame, but even if I bring it into this area right here. Now, the reason I'm not doing it is because we closed near the low, but it really doesn't change anything. Value is still up here at the 77. So I want to see if we fail to get upside the inside of the value area for the last 4 days. If we don't and we come down here, then I'll make another profile right here to see where they're trying to hold value. Personally, I think that we'll get back upside inside of here towards. We've got a couple measured moves higher, and we'll take a look at them in a minute. So let's take a look at the news. We had 8:30. We had the Philly Fed employment 22.6. Previous was 30.6. We had the Philly Fed manufacturing 22.7, was expected 25. Continuous jobless claims actually was a beat, but it wasn't that great. 1860 versus 1895, but previous was 1904. In terms of the continued news, we've got some Great Britain news coming out in 7 minutes. Again, this is is going to start heating up with the Brexit. And we also have Mester speaking in 17 minutes. 22 minutes, we've got capacity utilization rate, industrial production, manufacturing production, and then 37 minutes, we've got Brainerd speaking. And then we've got the Bloomberg consumer confidence, and 52 minutes, and then 10 o'clock, we've got NAHB housing, 10:30 natural gas, the Bank of Canada review at 10:30, Kaplan speaking at 12:30, and ECB Constancio speaking at 2 o'clock or 3 o'clock, I should say. But the big thing that we're going to be watching for is the whole deal with the tax plan, which should come to some type of a head today. I believe they're going to put it to a vote today, but not positive on that. Just taking a quick step back and taking a look at the macro to micro, you can see that the longer time frame trend is nowhere to be challenged yet. It doesn't get challenged till we get into the mid 2400s. Still in this upward sloping fork upper channel. Trend is still strong on the monthly. On the weekly, we have come down, and we had violated that one time framing. We're coming back down to the 9 EMA to test it from above. So we're just testing the challenge, the trend. We're not violating or challenging it. Yes. Going to the daily, see that we did have that bearish engulfing bar. We broke below the channel line. We got below the 9 EMA, and then we got below the 20. Now we're coming back to test it from below. This area right here in the 77 area is going to be extremely important that we get above that to get a continuation pattern on the daily. On the 4 hour, we were in a trend down. We're trying to get back above the 9 and the 20 right now, and see if we can reverse this trend and get the continuation back up. On the 1 hour, you can see that we have made that trend change. We got good slope and separation on the upside. Do have a naked cross down here at 2566 area. For the most part, it looks like the smaller time frames are starting to turn back up. There's the 30-minute. There's the 15-minute that we're going sideways here. Got a possible head and shoulder pattern here. I've got opposing head and shoulders then, because I've got this pattern right here, which is on the 1 hour, which has got a inverted head and shoulder with a zipper measure, or with a measured move up to the 25.8150 area. So we're going to have to keep an eye on this, because this looks like it could be setting up for a head and shoulder pattern for move down. But this looks like a smaller pattern, even if I draw this. So I would put the neckline right about there. And measure it from there to there. Yeah, this doesn't really violate, this is just a move back to the 25.70.50 area, which doesn't violate that other inverted head and shoulders. Going to 5 minute, excuse me. Going to the 5 minute, you can see that we're in this consolidation area right here. Probably going to get a bit of a pullback. It's part of my hypo 1 anyway. So we'll just go right into taking a look at that. So taking a look at the overnight session, you can see that we're about, I'd say, 90% net long. We've got another P-shaped profile. These buyers just keep stepping in. We get the naked VPOC above us at 79.50. Likely to get some responsive selling down to test the range at 71.50. We're going to gap up again today. So likely come down, test that range. In terms of my levels, let's start moving them over. Our overnight VPOC is not likely to shift, 73.75. The over-under line is going to get shifted up into the 78 and a quarter, and I'll tell you why. It's a little bit higher than that 77, but the reason why I want to go to use the higher number at the 78 and a quarter is I want to get above the high of this session right here and get the continuation that we were looking for yesterday. Because based on, just going back to, I didn't get a chance to do yesterday's pre-market, but based on the auction, this close at the high of the day and the P-shaped profile and the shift of the VPOC up near the close should have gave us continuation and not the breakdown that we saw in the Globex, yesterday's Globex session. And then they got the continuation into the RTH session and then started to move up. So this was a little bit of an unnatural move. So now if we can get back above the 78 and a quarter, then I expect the normal auction to continue and get the move up towards that 82 level. So our overnight high is 75.75. Our overnight low is 62 and a quarter, which is basically at our value area low. And there's really not a lot more to guide us. Is the LVN at 70? That is the value area high. I'm going to use the 69.50. And then the 71 as a breakout. The overnight low, obviously, with the value area low. And then our key line in the sand is going to be that 55.50, which is our week low. Our weekly ATR is running at 34.83. So off of the weekly high of 25.85.50. Our downside daily ATR is still at 25.75, and off of the low that we put in yesterday at 25.55.50, our upside ATR target, this is for the weekly, shifts to 25.90 and a quarter, right on top of that naked close and naked VPOC. And our week open, our 20 period full session daily ATR is running at 15.99 with 2 sessions left. That gives us a 31.98 critical mass number for the 2 sessions. So with our week open at 25.80 and a quarter minus the 31.98, our weekly critical mass is at that's wrong. 80 and a quarter minus 34.83. Our critical mass down for the week is 45.50, and off of the high, or the critical mass to the high side, sorry guys, 25.80 and a quarter plus 31.98, 26.12.23. That's right near our no, that can't be right. Yeah, it is. That is. That's our monthly 20. Oh, sorry. Our weekly ATR target, not critical mass. So this becomes our monthly ATR and our critical mass for the week. Which I don't think is going to be, what the heck did I type? I don't think it's going to be a factor today, so I'm not going to talk about it much. In terms of the daily ATR, off of the low overnight of 62 and a quarter plus the 15.99, our upside daily ATR is 78 and a quarter, and our downside off of the high overnight of 75.75, our downside daily ATR is down at 59. So, I mean, those are basically the levels. The levels above and below aren't going to change. So in terms of hypotheses, and what I'm looking at, 1 second. Okay. We're going to, we still have a lot of time, but we're likely going to open auction out of range. So I'm looking for responsive selling, and I'm looking for rotation down into the 69, somewhere down into the 63.50, maybe take out the overnight low with the trip through value. But then I'm expecting those plunge protection team to step in, those buy the dip buyers, and rotate us up into the 77, 78, and come back up into that balance that has shifted to the high side and back right inside of the VPOC and testing, coming up and testing the value area high. You can see that the overall most accepted price is very close to our value area high, which is just begging for a breakout to the upside. Is it going to happen? The way this market is, it's not auctioning normal. So, could we fail? Sure, but we have to go with normal auction logic, even though we didn't see it, yesterday in the Globex. But open auction, out of range, rotation down, somewhere into value, and then finding buyers in around the 68 to 62 area and rotating us up into the 78 and basically going sideways up here back in balance. Hypo 2 is going to be a open auction out of range, a push up into that 78. Responsive selling, stepping in, rotating us back down and coming back in, and basically trading around the 68 to 62 area and going sideways into the close. Hypo 3 is going to be an open test drive or an open drive. I mean, it sounds like a broken record, but it's the same thing day after day with this market in terms of the hypos. But anyway, failure to get back into value, maybe even reject the range high at 71 is going to be our over underline. Above it, did it again. I don't know why I always do that. I should have buttons set up for all of these. But it's better when I draw them manually because I'm thinking about them. That's the problem with automated systems. You don't think about it because it's automated for you. So open auction, out of range, a move down, failure to get inside of the prior day or the value, so somewhere between the 71 and the 69, finding initiative buyers, rotating us up into the 77, chopping here and then pushing up into the 83, getting the breakout above that 79, 79.50, and getting a push up into that 90 area and testing the weekly high as a trend day up on Thursday. And then hypo 4 is a failure to take out the naked 77 and a quarter, naked VPOC, come back inside of the prior day and basically chop between the 56 and the 68 area and just go sideways. The alternative is a breakdown day, a strong move down to the naked VPOC and the gap close from yesterday, chop here, then fail, break through the overnight low, come down to the 58, 59 area, chop here, and then push down and break through the 55 area and get a liquidation break back down into the 49, back towards where the microcomposite was before it shifted 2 days ago. So those are my main hypotheses. Taking a quick look at gold. Gold just won't get away. Whoops. Where'd my chart go? Gold just won't get away from this microcomposite VPOC at the 78 area and the composite VPOC down here in the 76. So all the numbers remain the same. We need to hold 78 and break 80 to get to 83 to 85. Any break above 85, looking for a move into the 91 to 93. Failure to hold the 76, tested the 72, below 72, 68, below 68, 63, and if 63, we test the 63, I doubt that we're going to bounce there. We go into a free fall down into the 1250 area to 1247. Same thing I've been talking about for how many days now? 20. And they're just, this is either a very poor auction and failure to, for the buyers to take control, which means they'll lead down to this 40, this 1250 area, or this is a tremendous basing pattern that's going to be very explosive. I think it's going to be explosive either way, because if it breaks to the downside, I do not expect 63 to hold and a bigger move down into the 1250. But if we explode to the upside, it could very, very easily get to 13 within a day, if not in one day. This is going to be explosive because we are compressing big time on gold. Anyway, still my longer time frame bias is to the upside on gold. I still expect gold to make a move back up into the 1300s and back towards this 1350 area and get the continuation, long-term continuation of gold moving up. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe. We'll catch you on the flip side.